CPI, PPI, obviously the midweek will be the most eventful week, guys. My only recommendation to y'all is skip Monday, Tuesday, save your capital for Wednesday and Thursday. If possible, you don't have to trade Monday, Tuesday. Monday might be good actually, but definitely skip Tuesday. The reason I'm saying Monday might be good is because of the volatile market. It could offer some large ranges intraday. But other than that, save your capital for Wednesday. So we have CPI, PPI on Thursday and Friday. No red folder, but we might get a TGIF or something. Depends on what price does. And for energy sector, same deal. Midweek, if you're trading crude oil or other commodities, your focus should be midweek, Thursday, Wednesday, and Tuesday after. I wouldn't trade Tuesday personally, but Wednesday, Thursday looks high probability. And for earnings, I'm looking at earnings and not seeing much. Maybe Adobe, GameStop. I don't think GameStop will have an impact on Nasdaq or indices in general, to be honest with you. But Adobe might have some sort of cause some sort of volatility in the after hours on Thursday. So be careful with trading PM session on Thursday. Other than that, it looks like a light week for the earnings. So on that note, let's take a look at the charts, the fun part. So we gapped down 60 points right at the bat. I'm gonna start with the weekly actually. So on the weekly, what it seems like, I mean, we have a market maker sell monitor right now. Let's be honest. We have so the buy side purge here, it dumped, formed a displacement, retest of the order block or the breaker block. It's the same thing honestly here, and that obviously did not hold and inverted the whole fair value gap, which is bearish. And we have clean lows, which was not taken on the delivery contracts. So if you're watching the continuous contracts, you're doing it wrong. This is relatively equal lows. It is not swept. Okay, so that should be the drawn liquidity for the week. And because of that, I'm expecting high volatile market this week, to be honest with you. I think we have a potential, the Nasdaq has potential to get down to 338s and below this week. But for the narrative, so this is the harder part. This is the toughest part. So for the narrative, this is what I'm thinking. So Nasdaq seeked some buy side, right? So here we have the daily buy getting taken out, and it kind of formed a trap here, slow grind lower, and then it lost it on Tuesday from the first displacement. IFED up there, and we have two BISIs here. Okay, the first one was already used, but the second one, we are close proximity to the second one. So if the market wants to form some sort of a weekly buy side wick, I think this is where it's going to refer back to. I'm taking it from the volume imbalance here on the daily. We might see maybe like, this is pure speculation, about maybe Wednesday high of the week wicking up into this fair value gap or inversion fair value gap or the VIB and selling off. This might be the narrative. Too early to tell though. We might just go lower right away as well. So we'll see. We'll go step by step, right? Let's see. And definitely have the NWOG on the chart this week, guys. 60 points, 60 handles, NWOG. It's pretty massive. So as long as it stays above, look for a south side delivery, honestly, because in that case you'll be looking for short setups above opening of the weekly candle, which will be yielding the highest probability short setups, because you'll be shorting in premium. So I mean, that's literally the only thing I can see in terms of retracement, potential retracement. It doesn't even have to get up there, honestly. But if it forms some sort of 15-minute or the hourly buy model on the lower time frames, we might see that trading up there to the volume balance from August 13 and August 12th. Yeah. Overall, draw should be 340, 330. All right, let's take a look at the 4 hourly real quick. Not the 4 hour. I mean, 4 hourly is in second stage redistribution right now. We had the SMT from Thursday, which confirmed and broke out of that range. And because it's the second stage redistribution, I would expect faster moves. I'm not expecting any kind of consolidation in this area, to be honest with you. The only thing that could potentially cause a reversal on the lower time frames is the BPR from August 8 and August 7. That might cause some sort of quote unquote relief bounce, and that's it. But I think it's going to get faded at some point, so you might want to have that annotated on the chart as well. Nasdaq likes to tease, you know that, guys. Let's take a look at the hourly. There's not much on the hourly, actually. There's a little tiny bit of SIBI, which was IFVD'd. I'm not looking for price reaching above that high because now that's an order block. I would love to see it staying below instead from the hourly perspective. And this will look better on the 15-minute because the 15-minute just broke out of the range, right? It broke out of the range, and right now there is a fair value gap there, SIBI. And that SIBI is right below a thick price action or a consolidation, which means the SIBI shouldn't really get faded for a cleaner order flow. It might go above these highs as a manipulation because it's relatively equal, but in the ideal world, in the perfect markets, the fair value gap from 15-minute shouldn't get faded. It should respect this fair value gap. I was actually gonna say it shouldn't even fill this gap all the way, but it did already. So there's a breaker block here. It just tested that breaker block and rejected what it seems like on the 15-minute. Also, I would probably keep the 545 level on the chart for now, for early in the week, just because if we see any buy side manipulation, that is going to be the target, and anything above that will be probably a fake out. But I want to see the same deal as we've seen here. Thick price action, SIBIs, didn't even fill it, so same deal here. Thick price action, SIBI, I don't want to see it getting faded for a clean order flow. It could get faded, but to keep things cleaner, I don't want to see that. Are you trading tomorrow? I have not actually made my schedule yet. I'm going to do it after the stream. I might not trade it tomorrow, but we'll see. I'll be definitely trading Wednesday and Thursday though. That is for sure. Probably what I'm going to do for tomorrow is I'm going to wake up, look at the market, and if I see something high probability, I'm going to live stream. If not, I'm just going to let it go, honestly. Like clear draw liquidity on maybe 15 minutes or something before market opens. All right. I'm going to take a look at ES real quick. ES looks better because it has more room to the downside. So what ES did last week and the previous weeks was it just traded above so it formed relatively equal lows, which is basically engineered liquidity. And then after forming that low, relatively equal lows, it just traded up into the weekly order block mean threshold, failed there, and about to violate the weekly BISI. So going into this week, what I want to see is I want to see a weekly fair value gap formation, weekly SIBI formation. So I'm not looking for major retracements on either ES or Nasdaq really. I want to see a wick, yes, but I don't want to see an immediate rebalance, if that makes sense, on the weekly. Because I think we're going to be seeing very 2023 lows or something like that. So here's the same deal on ES. It did some damage to the buy side here. I'm not sure if that's equal though. Let me check. 669. Yeah, it swept it. So it swept it. There's a buy side purge here, and that buy side purge led market to just basically crash and break down, formed a trap there. Here's a trap fair value gap, or the inversion fair value gap, some would call it. For now, I'm not looking for a retracement up into that fair value. It might come later, but after engaging with the sell side really, because right now we have a lower time frame SMT diverges in between these highs, 4 hourly to be specific. So I don't want to see market purging buy side right just yet. It has to go down, raid the relatively equal lows first, and then we could expect the major pullback, not before. Okay, so to this week, even if market gives you a potential buy side delivery on the lower time frame, you can take it, but I would say stay out of it. Just wait for short setups instead, because it'll be challenging for you to anticipate buy side deliveries comparing to sell side deliveries, because sometimes it doesn't even rate the equal highs on a bearish market. It just stops at the range EQ, and you might end up targeting the equal highs and get stopped out if you miss the range EQ or premium on the lower time frames. So let me take a look at the hourly on ES. On the 15-minute. Okay. So here's the same deal. I don't want to see the 15-minute fair value gap getting inverted here, because if it inverts this, the likelihood of buy side purge on the 15-minute is more than not, because these are relatively equals. It might want to reach up there because the sell side was swept already, and if it inverts this fair value gap, that means the likelihood of purging the relatively equal highs will more than not. But we might see that early in the week. Later in the week, I don't want to see that. If it want to purge the buy side and make a manipulation like that, it has to come either tomorrow or Tuesday. If not, if it doesn't go up there early in the week, I'm not going to be looking for a buy side purge. Let's see. All right. What are you guys thinking in the meantime? I'm going to switch to crude oil, gold, and all that. What are you guys thinking about the indices? Dead, right? It's dead. Crude oil, I'm bearish on crude oil. I think the let me see, this is the weekly, right? The crude oil draw on liquidity should be 63s on the weekly. I think it's heading down there slowly right now, but ultimately I want to see more lower. I want to see a breakout here and targeting the wick from May 1st, 2023. This is obviously macro level, but for now I would be looking for short setups targeting 63s. And on the daily, the way it seems like what it's doing is, so here, same deal with indices. So it purged some buy side, did more damage, and lost this area, basically stalled and formed a trap, and that trap caused sell side delivery. Equal lows got tagged. There's a power 3, and that power 3 led market to seek premium, and this area is basically the volume imbalance in the buy side purge. It got up there, sold off, and it's in a bearish order flow right now. You can see the clean lows here at 63.8. If you're trading crude, look for shorts. Not my assets class. About 63.2 is my drawn liquidity. And gold, I wouldn't touch gold. Gold is still range bound at the all-time highs. So here's what I would do. Okay, the gold purge buy side here. Okay, and it's stalling at the buy side, which means it's in deep premium, and we have equal lows resting right below. Okay, so the equal highs got purged, and we have equal lows. I would be willing to fade this move down there. I know a lot of people will be bullish in this price action, but I'll be sticking to my earlier analysis from, I think it was last month. So for now, I would be looking for short setups on gold if I was trading this asset. So draw liquidity, in my opinion, is 2,352. What you could do is you could either wait for this inversion fair value gap, which will be a trap, the trap confirmation, and then you can take a short in that fair value gap, targeting 2,300s. Oh, buying as Bitcoin. Okay. In the meantime, what I'm seeing here is basically there's an order block which is being respected. The mean threshold is being respected, which according to ICT, right, it's the confirmation of the LB. I would use those highs, the mean threshold retests, as a stop loss and looking to fade hold this move. And it looks like a fake bull flag as well. Let's see. Stocks, not stocks, sorry. DXY and the other assets. Alright, DXY. I'm still bearish on DXY. I think the DXY drawn liquidity is, as I tweeted this before, 89. Guys, I'm not going to switch bias until it gets down there. The reason is, these are equal lows, first of all. We did some damage to the buy side. There's a buy side purge, formation of the order block, and a breakout, basically fair value gap formation. This placed lower after taking the buy side. And the whole choppiness here is basically setting the market. Here, the accumulation. The way I see this accumulation is basically a higher time frame, perhaps monthly time frame, second stage redistribution setup. So once it breaks out of that accumulation, the low is 99.52. That's when we're going to see a lower resistance run. Okay, this is. Let me go on the monthly. I think you'll see it better here. You see that? So same deal that we had this week on the 4-hourly on Nasdaq. Displacement. Okay, there's a displacement. This is the monthly chart. Couldn't even reach up to the CE of that fair value gap, and there's a buy side purge. Okay, there's a buy side purge here. Market failed there. Tried one more time, retested the OB and failed. Okay, and the inversion fair value gap on that buy side purge held the price, and it's going lower right now. Now what I would do is, because the monthly has the equal lows there, the draw is definitely 99.58, but for 89 I would be looking for how price reacts to 99. If it starts stalling and consolidating here, then I might be saying like, okay, this is enough for DXY. I think it's going to turn bullish from here. But for now, I don't have that information. Because of that, I'm like, the likelihood of this breaking out from that equal lows is more likely than not. So this is what I would like to see from DXY. I'm bearish on DXY, bullish on Euro and GU. And the thing is, you guys know me already. I do not believe in DXY and indices correlation. I believe once DXY is in consolidating, in accumulation, that's when the Nasdaq and ES moves. When DXY is trending, that's when indices are get choppy. That's what I believe. So bearish DXY doesn't necessarily mean bullish indices for me. I don't believe that correlation. That's just me though. I'm not saying it's wrong or anything, but based on my back testing and my observations, it is not the case. Sorry, ICT. All right, gold, euro, same deal. You guys don't trade this, but I'm gonna cover it real quick. I'm bullish on euro still. I'm looking for 1.12, 1.13 as drawn liquidity. I think it should be drawn up to there. And GU, same deal. GU took that high already, and I'll be looking for more buy side targets on GU, and the next buy side target is these relative equal highs, which is original consolidation in the market maker buy model. 1.37. When I look at euro and GU versus DXY, it kind of confirms bearish DXY, honestly, because we have all these liquidity resting, and it did some damage here, formed a V shape, right? Seeked all the sell sides, didn't even leave any relative equal lows, which means this run to the buy side is actually healthy, and price doesn't have to come back to seek sell side or make another manipulation down below. So when I read the buy side, I look at the sell side wicks and try to see whether market left any liquidity down there or not, because that means it still has some unfinished business down there. In this case, it does not. Same as DXY. And Bitcoin. Oh, not stocks, not futures. Super newbie question here, but on the daily time frame on the bottom right, you have set clicked. What does that mean, and should I be having this on? I use it on. I use it turn it on. It means settlement price. Let me go to Nasdaq and I'll show it better. All right. It means settlement price. It turns on and off the settlement as close on the daily interval as it says, which means so when I click it off, you're gonna see the gaps differently. That's the only difference, because so here's what it does. I'll show you. So right now it's off. Okay, I'm gonna annotate the daily close on Nasdaq. Okay, then I'm gonna switch down to 1 minute. So the daily close will be this level right here, right? Which is what, 459, right? Then I switch back to set on, and you're gonna see that a wick. Why? Because it's gonna be using another value here. It uses the 4 o'clock. That's the difference. Instead of 459, if that makes sense. This doesn't make difference on the lower time frame, but when you look at the higher time frame, that's where it makes the difference. I use it as on because I think that was the ICT suggestion anyways. And I like to look at the specific time frames because New York session or New York Stock Exchange technically closes at 4 o'clock. So I would rather have the 4 o'clock close than 459, if that makes sense. Yes, it makes a difference on the daily or the weekly time frames, but on the lower time frame, on the 1 minute, it's not gonna have a difference. Honestly, it's the same level here, same price action, same gaps, same fair value gaps, and all that. It's just for the higher time frame purposes, and as also you're not gonna have that tool, or how do you say it, like that option to turn it on and off on the lower time frame, lower than daily time frame. So even if I go on the hourly or 4 hourly, I'm not going to have that option. It's only for daily and above. I would keep it open. All right, crypto. This week's gonna be a fun week. I can feel it. Last week was not my best week. I closed in a very, very small drawdown, like I don't know, $50 or something. So basically break even. But this week we're gonna get after it. All right, Bitcoin. Let's start with the weekly. So the weekly doesn't look good at all. Initially, I was thinking about 3 drives on the weekly, bullish 3 drives. Didn't pan out, and instead, what it had was it's respecting the fair value gaps here. Respected the fair value gap and formed a rejection block here. I think, let me see 1 second. This is the OB. The OB mean threshold was retested over there, and it come all the way up to this inversion fair value gap. Interesting. But overall, on the daily, we have a power of 3. The best short entry will be from the inversion fair value gap of the power of 3. If it could get up there, that means it's sweeping some buy side, basically forming an ICT 2022 short setup. I would take a short in that fair value gap and targeting these relatively equal lows right here on the daily. If it leaves it like this, right now it seems like if it leaves it like this is going to be a high probability short entry and drawn liquidity, which is at 49k even. And then the next liquidity will be this. I'm bearish on Bitcoin. Honestly, from here, it could actually go all the way down. Hope not. Hope I'm wrong. We'll see. I'm speaking early, but for now, the wick at 49k is my target. Something like this. And depends on how it reacts from that low. I'll be looking for either lower prices or a reversal. Let me check ETH though. Yeah, ETH also leaving equals there. Same deal. Here's a buy side purge. There's OB and an inversion fair value gap. You can use either or. This inversion fair value gap should hold price if it goes up there, and that's going to be a good short setup for ETH and Bitcoin. All right, guys. Yo, Dio, what's good, brother? Do you guys have any questions, or do you want me to trade Asia session right now? No, I'm kidding. Let me just check it out real quick though. I'm gonna turn off the